Hello and welcome everybody. Welcome to our PMS and our live stream, which is happening after a very long time. I think the last one we did was somewhere in December, and there is a big surprise for you. We have Siddharth back on stage.
Hello,
Many of
everybody. Good morning. Thank you for the introduction, Sohan.
yes. Um, So it's an interesting time in the market. Very happy to have Siddharth here with us. A lot of our investors really like talking to him, and I think they're very happy to see him back here. Um, so today, what we're going to do is we're going to Siddharth. The agenda is that we'll talk about the recent market updates, right?
Right, right.
What's happening in the market? Are we, is it a good time to invest? Are we seeing a very strong recovery in place?
Correct.
What are the factors in play and what the performance has been, right?
Right. And also, what is the way forward, the outlook for the whole year, and what are the
Yeah,
sectors that are booming, and we can talk about those things as well.
definitely. We'll also talk about our experience in the last few months, right? Maybe
Right.
we'll shed some light on that as well.
Yes, absolutely. So,
Cool. So maybe I'll start with the presentation and we'll keep it conversational only. Is that
yes, absolutely. So you can go through the presentation, and I will try to pick up some questions. So, guys, I request you, if you have any questions, just drop it in the chat box, and we'll try to pick up as many questions as we can. Post the webinar, we'll also float a form. So, in case we've missed out on any questions, you can send it to us, and we'll cover it up in the next.
right? Perfect. So I'll start by talking maybe a little bit about how it has been, right? So obviously, you see, in our strategies, we've seen corrections in January, right? We were not into large caps, we were not into cash. We had risk in our books, and we saw corrections in January. And I think so that is something that everybody across the board saw, right? It was not distinct to
Yeah,
us. And
correct.
yes, and so if you actually like you pull out data for any mid and small cap fund, mutual funds, you pick out data for most of the momentum strategies in the market, you see our drawdowns have been pretty much at par, right? I think the alpha strategy, obviously tends to have slightly higher risk, so that one is, by nature, but our drawdowns have been pretty much at par. But I think there's been a lot of learning for us that I think we should talk about it.
Right.
See,
Yes, I think also, our drawdowns have been at par, but we've still been able to, sort of understand how to manage risk, I would say. And I think things would seem to be getting better as the markets are also picking up. So I think the confidence among investors is again building up.
yeah, confidence is building up, but I think also in terms of experience for us, it's something to talk about because see, in the last 3 months, see, we at Right Research, we've been in the market for 5.5 years. I've been in the market for 15 years now, but but yeah, during the last few months, the scale that which we are running right now, right, where you had 600, 700 people who have a personalized connect with you in terms of PMS, right?
Right.
So that is something that we saw happen, that on any correction day, which is normal across the board, right? It's not like Right Research is causing any corrections.
Correct.
We would get a lot of client sort of queries. 10 people in a day are calling and shouting at me and stuff like that. So I think that is something that as an organization we have to learn right now. I think that is something, the access control, right,
Right.
is something that we have to run. Even in terms of people who are invested in the market, right? You have to realize that if you are seeing some sort of volatility, does it make sense for you to go and shout at the person who's managing your money? I don't
Right.
know. Yeah. And also I think people also have to realize that this is part of the market, right? See, many of us have been part of the market for 15 years. We've seen
Right.
those scenarios where the market did not move. We've seen those scenarios where the market has had a lot of volatility. And then
Right.
last 4 or 5 years, people have seen amazing market, right? Every few days, stimulus is coming in and liquidity is coming in, and the market never goes down.
Right.
But yeah, but I think risk is part of the market. If you are investing into the market, then you have to realize that risk. Otherwise, you need to learn, right? You There's a pre-qualification for people to be investors as well, right? You can't just
Right.
assume I'll manage a risk and then you start panicking at the whenever the risk comes in. I think that is something for people to learn, and also uh, a lot for people to learn is give your investor manager also a little bit of a leeway, right?
Yes.
Because
Uh,
to hmm,
Correct. But when it comes to investors, it is very understandable for investors to get agitated, because at the end of the day, they've put in their hard-earned money, and
no,
once
for
they see
sure.
it eroding,
No,
yes,
for sure. But like, see, I mean, but yeah, see, like we have 700 investors. Not everybody is panicking, right? It's a
right,
set of people
right,
who would have a very loud sort of a reaction. Because see, in equity market does not mean that every month 10% returns, right? That's not what equity
absolutely,
markets are,
yeah.
right?
That's a wrong expectation to have probably from this as an
Yeah.
asset class.
Yes. So, see, I think, see, like I have all my capital, my family's capital, and my extended family's capital
Yeah,
into the thing. Nobody panics, or I haven't panicked. I've not looked at my portfolio where it is. I know what
correct.
is going on, right? But yes, on the other hand, if you start sort of, let's say, if we had started accounting as a company, so that you
Hmm.
know I am hiring or I'm growing, assuming a 10% month on month growth,
Yeah,
then I would be panicking and I would be shouting at
correct,
anybody that I could, right?
correct,
So that expectation mismatch is something that has to be worked on. Anyways, I am
right,
venting out in the beginning of this thing, but let's go over the presentation, right?
absolutely,
Yeah, yeah. Anyways, so see, obviously, look at the market scenario, right? So this is something that we track, so that which is the fear and greed index in the market, right? This is something that we make and look at how much fear you're seeing, and you can see that since January this fear had kept on going and going and going and going, right? There was no stop to it. And we saw that finally in the last 3 odd days there has been a very sharp recovery in terms of these fear indicators, right? We're seeing a uptick that is happening. It's a very strong, I think it's a very strong indicator that the market might have bottomed out, but again there's a lot of uncertainty in the place, right? And that is
correct.
what we have to understand, and that is what we have to sort of work with right now, right?
Correct. One
uh,
question to this, Sonam, when you talk about the fear and greed index, um,
hmm.
could you give examples for us as investors to understand that has there been situations like this in the past as well, where it
Yeah, yeah,
has risen and there was a
definitely.
lot of panic in the market?
Yes, so I have this as a next chart here, so that, so
Sure.
if you look at it, this is from 2020, right? So obviously, when
Right.
it is not at 2020 fear, that was the very bad scenario. But we are at 2023, right? Remember, 2023, towards the first quarter of 2023, there was a big panic that happened, right?
Correct.
So we are at those levels. We're actually worse off. We went worse off that at those levels, and I think, um, because of the big things that are happening in the world, right? I think if you follow global markets, the talk of recession, this talk of
Yep.
uh, tariffs and all that, right? So
Yep.
it's at some point in time it started looking a little bit precarious, right? Can it actually breach all these levels, right?
Right.
Because the, like I said, the fear was not subsiding, right? It kept on going down and down and down,
Correct.
right? So in this, we get every day I get somebody
Hmm.
or the other giving me lessons ki this was the correct level or this was the bottom. Why don't you realize it? But see, um, in the last 3 6 months we've all been wrong, right?
Hmm.
We actually, somewhere in January, we bought maybe at around these levels. We thought we were at a bottom, because that's
Right.
what the levels that we had seen, right, in the past few months. And obviously, uh, and then it got worse and worse, right? So for you to say that any technical level is oversold or the pivot, you will be wrong 9 out of 10 times, right?
Correct.
So it's a uh,
So I
you know
think we've seen these situations many a times, and I think it's a part and parcel of the market. In fact, this correction was uh, is deemed to be healthy as well, right? so that the market could rise from here again, break its levels that were the previous levels, right?
Right. Yeah, I think this is definitely. I think this is a pretty something that happens in the market, right? And
Correct.
if you're seeing a correction like this in the market, and somebody on the news is telling you there was this smart guy who has 80% cash, right?
Yeah. Yeah.
So there's that one person who's doing that, right? Everybody on earth has taken risk, right? And see, it's very easy for you to come and sort of compare, uh, people who have. So let's say any fund, Siddharth, who has not taken any risk, right? Who's sitting on cash, who has a lot of, let's say, large caps, right?
Hmm.
They might have done better in the correction, but in the past year before that, they would have not given investors anything, right? And at par, even net, right? If you compare, let's say, a year or
Right.
so of performance, people would have been at par, right?
Right.
So, so you see, it's very easy to, and I think with all the news channels and all, you get sort of boggled by a lot of these things. But I think what people really have to learn is, and we also have to learn is that how to handle these situations better, right?
Absolutely.
Especially when things are getting panicky, and even in terms of processes, access, how our team manages clients and all, we have to learn a lot uh, in this.
Absolutely.
Yeah, yeah. So, I mean, that's just given us a very stark picture. When we started, Siddharth, you and me, we were available for each and every client, and we would
Correct.
do a lot for everybody. But I think as an organization, we have to evolve, and I think even
Yeah.
even putting steps that I keep on thinking of, delaying access to the portfolios to the clients or putting exit loads, right? I
Mm.
think things like those also make sense, right? When you see such behavior or such mismatch between investor understanding of the market and markets, right?
Right.
Right. Anyways, uh, so see, what are the big things that are happening in the market, right? I think the biggest thing that is happening in the market right now is that the tariffs, right?
Correct.
And that's a big thing that people, and that's what caused all the volatility, right? I think the markets were seeing uh, growth slow down, or a mix of factors, the interest rate, inflation, and all, right? They were
Right.
there, but I think with this new variable, which is the tariff war that Donald Trump has sort of started,
Mm.
that has really escalated fear in the global market, right?
Correct. And I think
It,
this is not only peculiar to India, as you were saying, it's a global phenomena, right? All the countries and economies across the globe are getting affected by this.
hmm. No, definitely. I think it's impacting the whole world. And actually, if you look at the US, in fact, so that is the one where people are seeing a big recessionary risk, right? I
Right.
think in the past few days, Donald Trump has gone and said, I'll welcome a recession. Maybe we need a recession and things like that, right?
Right.
So I think there are big. That's a big thing that will impact, and I think in the next couple of weeks, that is the one thing that's going to impact our markets also,
Right.
because I think April 2 is when tariffs against India and all will be announced, right?
Right, right. One quick question. I mean, just to keep this conversational, I think questions have been pouring in, so I'll just try to highlight it and pick it up. One quick question that a lot of people would want to know about is that when it comes to tariffs, right,
Hmm.
specific to India and specific to our strategies, how does it affect us, and on what level does it affect us? If we could, quantify that a little for investors.
Yeah, yeah, so definitely we'll do that, and we keep on sending a lot of content around it, right? So I think it's an excellent uh, report that or like I just share my screen. See, an excellent post that we did on reciprocal tariffs, right?
Right.
Last week. And what you will see here is that India right now has a big mismatch, right? So
Hmm.
India, US puts 3% tariff on an aggregate level to India, and
Right.
India puts 10%, right?
Hmm.
Differential is 7%. So US tariffs could essentially increase by 7%, right?
Right.
And where would it impact us is, you know, auto components, right?
Mhm. Right.
Semiconductors, agriculture, pharmaceuticals. So, I put it down in the presentation also. Uh,
Perfect.
yeah, see here, if you look at it, right now, our biggest exports are pharma, where you could see some tariff
Yeah.
changes impact. You could see smartphones, jewelry, right? These components will be hit,
Right.
right? I think auto components is something that people are thinking a lot about. Plus, I think
Mm.
if EV imports into India are allowed, Tesla is planning to coming and all that,
Right.
right? So it's going to have a big impact on Indian automobiles also. Apart from it, you will see that I think fish, right? Crustaceous is fish, transformers,
Right.
iron steel component, furniture, stuff like that. But see, I think India would have, let's say, a lesser impact than some of the other countries. I was looking at it somewhere, right? So India
Mhm.
is not the biggest exporter to the US, right?
Right.
Biggest exporter to the US is Canada, right? Where they have already taken, and then China. And I think the world order, Siddharth, would probably evolve. I think, the dependence on US tariffs would reduce. We're already seeing, I think we were discussing Japan and Europe are seeing a lot of growth, right
Correct.
now,
Correct.
because, the global supply chain will also diversify. And I think a lot of people are sort of assuming or sort of uh, thinking that China would actually be the winner of this because
Right.
China would see a bigger sort of presence in the global trade, right? Uh,
Understood.
yeah.
I think
So
these are very interesting numbers, and as you said that we've published a little bit of this on the article front on our website as well. So I would
yeah.
urge investors to go and read it across, so that they are able to understand the sectors. How does it look on a quantification level, right? So
So
I
we
would
keep
urge all the
on,
investors to go and read a lot. We keep posting amazing stuff. We have a very good content team that works really hard. So do support us by just
yeah.
reading through.
Yeah, so we keep on posting a lot, right? And every week I have a discussion with Siddharth Vaiswara, who works on content with us. And he's like, Sonam, what should we write about?
Right.
And every week I'm like, so that Trump has done this or this policy or tariffs. Now he and the content team always tell me, Sonam, we cannot write about Trump anymore. No more Trump.
Right.
It's been enough. I think that's what the scenario is across the board, right? Everywhere. There's too much
Correct.
of Trump. Uh,
Correct.
anyways, um, so this is on the tariff front. I think the next thing is the global slowdown, right?
Hmm.
I think this is something that spooked the market or spooked the sentiment around last month or early last this month is that due to these tariffs, due to these technical changes, it's not like that the US economy is slowing. It's not like employment is declining or growth rates are declining or anything like that.
Hmm.
But more from a technical perspective, if the trades are impacted like that, right, they will impact the US economy, and they could really
Right.
take down the US consumption a lot. It could have a recessionary impact. So that those are some sort of fears that are still there in the market, which come from this tariff scenario, right? And we'll go over that. I think the global scenario next also, but
Correct.
I think the next big thing, Siddharth, that is going on in the market right now is I think the RBI rate cuts, right? So
Mm.
we've seen all the volatility and we're seeing some recovery happen right now. But when will when will the recovery be strong, right?
Correct.
That is something to think about. And the recovery will be strong when number one, you see earnings recover,
Correct.
or when you see the RBI policy, right? That they're
This is the
cutting
central bank.
rates,
Correct.
right? So talking about the RBI policy, right? I'll just again share my screen. The few factors that the Indian banker sort of looks at, right? One
Hmm.
is inflation. Inflation has declined, right? It's at a bottom, so that's a positive for the economy. Second is in terms of the growth numbers are steady right now, right? Um,
Correct.
it's not. It's obviously it's lesser than, let's say, the projections that were last year, but still steady. Global central banks are cutting rates, right?
Correct.
Fiscal stability, right? And I think uh, I think RBI has had a sort of a accommodative bias in the last policy, but right now, actually, if you look at it, many people are accounting for a rate cut, right?
Right.
We saw
Right.
a report come from SBI Research, which is in fact, assuming that we're going to 75 basis point rate cut, which I don't
Uh,
think is going to
yeah,
happen. Yeah,
it's
but that
extremely,
is,
yeah,
yeah, yeah. But yeah, so I think we could expect a rate cut, right? And I think the RBI policy is in the first week of April only, right? I'll just check on the exact dates. But yeah, I think if that comes, that will be a big sentimental positive for the market, right? Because that helps businesses borrow money easier, and that will maybe help us get a pickup in the private capex that hasn't been happening, or the consumption spending that hasn't been happening for some time in the Indian market, right?
right. And I think, all of these moves that would be done and taken forward by the central banker and the central banks, not only in India but across the globe also, would impact the earnings, right? So
Mm,
as you were mentioning that the earnings might not be as very good in terms of expectations when it comes to the previous projections, but we
mm.
always say that projections are projections and they need to be revised according to
Right.
the global and market conditions. But
Definitely.
definitely, from the previous quarter we are going to see a pickup. We all are
Mm.
expecting that. And with earnings kicking in, the global bankers actually doing a good job, there will be some stimulus that the market would expect, and there'll be a bounce back that we'll be expecting in the near term for sure.
Right. Uh, in terms of, say, I think when we talk about policies and when we talk about rate cuts, right, I think maybe I'll go to the, I think, the earning trigger, right? Earning trigger is something that, yeah, I think that is also a big thing, right? So you get a lot of reports about India earnings, right? I think
Right.
India earnings are at the bottom, right?
Yes.
Last quarter, we were at the bottom, and I think, see, Indian market, if you actually look at it, India has these amazing management companies, right? Amazing companies in India, which have demanded a premium compared to emerging markets, right?
Right.
But why are we at a premium compared to emerging markets? That is because that we were seeing sales slow down across the board, right? Sales were coming down, right? There was a
Mhm.
slowdown in let's say global sales, but Indian companies optimize their earnings to increase margins, right?
Right.
So while the top line was not growing, the bottom lines were still positive, right? The growth rate was not declining that much, right?
Right.
And towards, I think, last quarter, the bottom line is also at the lowest level, right? And I think
Correct.
that's a good place to expect a pickup. Obviously, you can't be sure about it because there's a lot of things happening in the global market.
Hmm.
But even in the earning cycle, right? If we get a few good positive surprises in the next quarter,
Right.
that should be great, right? That should be great for investor sentiment. But yeah, if you look at it, India's decline, right? Nifty's decline happened independent of the global market, right? So even if you look at
Hmm.
emerging markets have done so much better compared to Nifty in the last 6 months, right? But
Right.
Nifty has also done extremely better compared to
Yeah.
emerging markets in the last few years. So like 2022 now, Nifty has done extremely better, and then we are seeing some sort of normalization because what has happened is our earning growth rate are maybe at par with the emerging market right now, right?
Hmm.
But our valuations are high,
Correct.
so people
Which
have
is
so
again in regard to the rally that you were talking about, right?
yeah, yeah, yeah. So I think so there has been a concern about valuations, right?
Right.
But we've seen valuations correct, right? I think Nifty valuation premium to the emerging market is at a 10-year average, right?
Hmm.
So Nifty is near about the valuation correction might have been uh, priced in right now. On the small and mid caps, there is still a little bit of a higher premium, right?
Right.
But yeah, I think see, working with valuations is very tricky, right? Looking at P ratios and stuff like that, especially for people like us who do momentum investing, right? It's always very tricky, right?
Correct.
When you are investing into a company from which you expect a higher growth rate, you would expect the PE to actually get higher, right?
Hmm. Right. 100%.
Yeah, you want to invest into companies which are actually commanding a good PE ratio, but then uh, so I think P or something like that might not be the best sort of a ratio to actually judge things with. What I really believe, the focus area right now, Siddharth, has to be more about the uh, quality, right? So when we say quality, what do we mean, right? I think I talk about quality a lot recently, but
Correct.
what do you mean when you say quality, right? So quality
Mhm.
means any company that utilizes its resources really well and consistently generates a return on that capital, right? So
Fair
if
enough.
let's say the company has 100 rupees cash, right? In terms of working capital, in terms of its resources, not like the fixed assets, but in terms of the resources that it plays with, it is always generating a return on that capital, right? So those
Correct.
companies are the robust companies. Secondly, those might not have gotten attention right now, right?
Hmm.
For example, in a bull market, people forget about all of that, right? But
Right.
in a market like that, for example, look at stocks like Pidilite or Page Industries, stuff like that, right? They are very forgotten sort of stocks. And I'm not
Right.
saying that you should go and invest into these stocks, but look at the way they compound capital or the way they sort of make money from the money that they have, right?
Correct.
Consistently generating 30-40% return on capital invested and all that, right?
Absolutely.
So those are the strong businesses. Secondly, businesses that have good asset turnover ratios. The businesses that are very robust. Their supply chain is not, let's say, a company who might be doing extremely well, Siddharth, right now, but gets
Hmm.
all its business from US, right? Is
Right.
that right? But companies that are robust, whose value chain is robust, who generate good return on capital, those are the ones I think, and where you have a predictability on earnings, right? Where you see this
Absolutely.
company is going to have a predictable earning, right?
Absolutely. And also to add to it, I think these metrics, say for example, the ROCE part, the return on capital employed that you were talking about, also has a direct inference to the management quality, right?
Yes.
How the management is actually performing. So we can judge managements
Hmm.
based on these difficult situations, on how they handle the capital and how they try to make the most of the money that they are generating from the business itself, right?
Right.
So they're extremely
Definitely.
important metrics.
Yeah, yeah. I think that is the thing, right? Management quality, how well they manage their capital, how do they take risk, right? So any company who's
Yeah.
taking calculated risk might be a good company. A company who blows up money
Right.
every right. So that is not the bet you want to take up
Correct.
uh, time. Similarly, I think even in terms of industries, right? That if you
Hmm.
look at it, the more old school industries or the more consistent sort of industries might be doing well instead of industries which are relatively new and thematic, right? So, for
Right.
example, a thematic play like EV would have seen extreme volatility,
Correct.
right? And with now the US companies coming in and all that, and the innovation that's happening in China, right?
Right.
There's a lot of impact. So maybe also sticking with industries where you have some history, right? Could
100%.
be a sensible thing to do as well, right?
I think some
So
lineage also matters, as you're mentioning.
yeah, I think lineage as in how well do they take risk. I think that is important. Plus, I think the industry's newness also matters, right? If
Correct.
it is
Absolutely.
something like, for example, we've seen like EV and green energy, right? These themes have done extremely well in India, right?
Hmm.
But if you look at the US, right, there's been a massive rally in green energy and all that, and there has been a decline that has kept on going, right? For example, the ARC ETFs and all that we used to track, right?
Correct. Correct.
Yeah.
And I think that's also largely associated with the president focusing more on, drilling and getting the oil, right?
Mm.
He's more focused on that. So I think that
Yeah,
also
but
leads to a decline in these thematic cases. Yes.
yeah, thematic, yeah. But you see, what you have to actually realize is that in terms of industry, the industry which is relatively new and thematic will
Right.
be will can have a very big positive and a big negative. But let's
Right.
say Pidilite which is making Fevicol or a or a big industry which is making underwear, right? They are not going to impact. They have a value chain that will keep
Right.
on generating that return on capital,
Right.
whatever happens, right? People have to buy. These things. So I mean, see, I'm not saying that you should go and buy Pidilite or anything like that, but I think in a volatile market, that is the thing that will be attractive, right?
Right, 100%. Also, the stocks that we're talking about is not any kind of recommendation. This is
Not
just
at all.
an
Yeah.
analysis that we are trying to do as an example to state what we are trying to state. Uh, so, yes,
Yeah, perfect. So let's go over the next thing, which is what FPI flow, right? So this has been a
right,
big thing. So I think we were not expecting the recovery that happened in the last weeks, and let's be honest, it's only 3-4 weeks of recovery that has happened right now. It's not
right,
a recovery that is set in stone, but we're seeing FIIs are finally buying after a very long time. So that in the last 3-4 days, you've seen FIIs buy into the Indian market, which is very encouraging. I think some of the reasons for that could be that the US Fed is now, as it cuts the rates, emerging markets get higher appeal. Similarly, I think INR is appreciating, dollar index is going down due to the Donald Trump's policies, right? He is
yes,
not in the favor
correct,
of a very strong dollar. He wants to lower his currency so that his economy, his manufacturing becomes attractive. So
correct,
so as INR goes up, it could attract some equity flows.
right,
There's a valuation comfort, and I think China, has actually. I don't think China is weak right now. China actually has a strong sort of a stimulus that has gone in, right? It's actually looking at a very attractive market.
right,
Right. So I think that's also some of the triggers that can lead to FPI flow, but it's very good to see that FIIs have come back. So this is the data that I pulled in. If you look at
yes,
it, FII flows have been very, very negative for the past months, right? You can see
correct,
no positive days since February, this data, but only the last 3-4 days you've seen a positive buying. Similarly, if you look at month on month, that I think since October they've been selling very aggressively.
right.
And in March, you can see that uptick happen. I think that's a big positive, right? I mean, that's a
Right.
positive, but it's only 3-4 days, right? So we have to watch how long,
Correct.
it's.
There's this interesting question that's been popping up, Sunam, from I think one of our existing investors, Mr. Rajesh. He's asking that everywhere in the news we were talking about. I mean, it was across the news where we were talking about that the Indian market is stable because there's more DII monies right now compared to, say, for example, what happened in the GFS, which was the global financial crisis, right? At that point in time, where there was more FII monies, they pulled out, the markets crashed. But the DII money base has also increased comparatively from the past. So, do you think that's still going to have an increment, or is there going to be a balance where FIIs will be pouring in more money, DIIs will be reducing it a little bit? Uh, what do you think?
See, I think structurally, Siddharth, things have obviously changed in India, right? I think the number of
Right.
investors who have come in into the market, right,
Mm-hmm.
are obviously Indian markets have expanded that breadth of investors, right? So
Right.
the amount of money that has come into the market has obviously expanded. I think the regulations that are changing right now are also accounting a lot for that. I think they've really impacted the derivative markets right now, right? And
Mhm.
even in the cash market, you're seeing some sort of.
Right.
See, if you track some of these capital market players, so another tidbit that we were highly allocated to the capital market before January, right? Because that was a
Right.
strong segment. You go to a broker, or you go to a CDSL, you go to a CAMS, right? We were invested
Right.
across the board. But then, these things are very, very, they are very, this, like market correction tend to have a very high impact on businesses like those and like ours, right?
Correct.
At the moment, when things are attractive, you see, let's say a Zerodha grow its volume 20% in a month. But
Yeah.
similarly, in a declining market, you would see them also lose, let's say, 40% of market share in a matter of a couple of months, right?
Right.
So you see, I think DII is, uh, see, it's a reciprocal sort of relationship. Whenever we see that FIIs are buying, you tend to see DII is selling, right? Or
Correct.
sort of selling to the FIIs. I think that is the equation. But yeah, I think obviously the breadth of the market has increased. Right, it's a big strong point for India.
Correct.
And yeah, but I think you would always need FII capital, right? So you cannot. I mean,
100%. And as
India is
you
not
mentioned,
the
that's been
space where.
increasing as well.
Yes.
in the past few days. Yes.
Right. Yes. Perfect. So now let's talk about big sentimental impact. So we talked about a few things. So we talked about reciprocal tariffs. We've talked about RBI policy. We've talked about FII flow and earnings. Right. Let's talk about global triggers. Right, which are driving sentiment. So one big thing, in terms of sentiment, right? I think towards the beginning of the March, I think we were all in a very panicky sort of a situation. I would say, or there's a
Hmm.
lot of fear in the market. Why was that? Because there's a big thing which is the recessionary risk, right? So if you look at the recessionary risk, I have an article here that I've opened. What you would see is that the GDP projections for the US are going down, right?
Hmm.
In the
Yes.
Trump presidency, what you can see is that trade balances have really gone crazy because people are importing as much as they can before the tariffs hit, right?
Right.
The US, so you've seen that happen. Gold imports have gone crazy in the US, right? Because of the
Right.
fear. The inflation also slightly picked up. You're seeing employment has slightly reduced, right? And
Yes.
I think dollar is depreciated. So that's, I think that narrative will still be there. I'm not see nobody is projecting a recession right now, right? But I think that will be a talk, right, in the next few months and quarters, right? People will
Correct.
be talking about recession fears in the US. Similarly, I think in China, a lot of interesting things are happening. I think China is getting stronger and stronger. They have really built up their value chain, right? So if you look at it, China might have better trade relationships with the world compared to the US right now, right?
Right.
And I think what Donald Trump is trying to do right now is maybe follow China by increasing tariffs and restricting his countries as a America first thing. But
Correct.
yeah, I think China is going to have might do strongly and might become a stronger trade partner, and with the Chinese government doing this stimulus, right? That is a good thing for that economy.
Right.
Uh, I think geopolitics is another thing that will impact sentiment. I think whenever things escalate in the Ukraine or in the Middle East or in Taiwan, right?
Correct.
They are big things. And then I think the Fed policy is also, people are expecting rate cuts to happen. Uh,
Right.
the US Fed had a very not a positive, but they sort of reduced the fears that were there. They said, we are not fearful about the economy, things like
Right.
that. It was a good thing that came up. Think couple of more things, Siddharth, before we go to the questions. I think capex is something that people are talking a lot about. That we can see that government capex has declined. They've not met their targets in the last year, right?
Correct.
But obviously, I think people are expecting something because that's why you're seeing these big rallies happen in the infra, defense, and railway stocks, right?
Right.
Even though there's no strong news or anything like that. I think on the other hand, what we are seeing is Europe and Japan, right? These defense
Hmm.
stocks there are seeing because the governments are spending more money on defense in those countries. So you're
Right.
seeing big rally happen in the European and China capex. I think private capex is still lagging. I think once the rate cuts happen, maybe that sort of boosts the private capex.
Right.
Um, yeah, I think so. That is the landscape here.
Got it.
In terms of the next thing is the crude oil, right? So crude oil, I think has seen a decline, right, in prices in the recent times, right?
Yes.
But yeah, I think Donald Trump policies can be inflationary for crude, right? And if that happens, people, you could see crude prices rise, and that always has a negative impact on India's trade balance, right?
Correct.
So that is something to be looked at in due time. So that is more or less what we have to talk about. Let's talk about our strategies maybe quickly. Obviously, these numbers are till February. We've seen a correction. It happens in equity markets. Obviously, we've seen sharper corrections because we had high momentum stocks, right? And we did
Yes.
have small and mid cap stocks, which is the bias that you would have when you are going to companies where you expect higher growth. There was
Hmm.
financing that happened, and we've seen some corrections, but we expect a good recovery from these numbers as well. Um, in terms of our recent performance, obviously, recent performance you will see maybe lower than the market, but still in the longer term, we continue to do better than the markets, and we have a lot of confidence in what we do in our strategies,
Correct.
and we expect good numbers coming out from there. Let's look at where we are investing right now. We still have some cash and gold and some China exposure, which is showing up in the ETFs,
Hmm.
right? But where we're investing right now, majorly, you're seeing some finance and fintech. You're seeing pharmaceuticals have a
Right.
good allocation, electronics, e-commerce. There's a little bit of IT, electronic equipment, hotels. Um so a little bit of consumption play, little bit of finance play, and some cyclical stocks as well, right? But you can see that the bias is more towards large and mid cap, right? More large and mid cap than small caps. Uh, in our momentum fund, again, you can see telecommunication, construction, pharmaceutical, stuff like that. I think I have not refreshed this one, so let it be. In terms of our alpha, we still have a lot of cash to be allocated, but yeah, I think we have a good allocation uh, to consumption and finance and a lot of interesting stocks, right?
Correct.
We also, so yeah, I think we continue to remain very very confident about the strategy. During this correction phase, we've had the opportunity to really go deep into studying what we do and spend some time in improvising, finding out the levers that we can play with across different market scenarios,
Right.
and that has been a great thing. We expect, so we remain very confident about the recovery,
Correct.
and yeah, I think we are here
And
for the long haul, and we will evolve even as an organization how we approach uh,
right.
our communication with the clients in these markets. How do we manage expectations in these markets, and how we manage risk as well. So yeah, maybe we
Correct.
can go to the questions, right?
100%. No, I think thank you for this presentation, Sonam. It has been extremely insightful. I'm sure it gave insights to a lot of investors on what's happening and how can they plan their approach to the next investments that they are looking at. Right. So what we'll do is I'll take up some questions, about 3 to 4 questions, which we've amalgamated, and then just in case guys, if we've missed any questions, you still want to reach out to us. We are always happy to take up these questions for you. Um, Right. So there's this question that has been coming from Mr. Pawan Patil. He's asking, how do you assess platform service players like PB Fintech, Just Dial, Zomato? Considering AI impact, will these players have significant impact on services they offer? How do we assess these AI players in the market?
See, I think platform players are still a very good bet, right? I think PB Fintech, Paytm, Zomato, all of these is somewhere we have invested somewhere or another,
Right.
right? I think these are all interesting plays. You cannot compare valuation for these companies because they're just
Correct.
turning profitable, right? So, but yeah, I think, even in terms of AI and all, right? I think let's say a Zomato or a PB Fintech might be the biggest adapters of AI in the market,
Right.
right? So platforms, Zomato already has a lot of AI into their systems, right?
Right.
On the other hand, I think where we are seeing, where I'm concerned is on the actual IT services industry, right?
Okay.
I mean, they are getting impacted by global AI, right? So let's say a
Right.
company that was outsourcing something to a Indian IT outsourcing company now has AI, right?
Right.
Yeah, I think that is where you see impact into the platform plays. I don't see. I mean, obviously, these platforms are adaptive, right? I think they are
Absolutely.
making use of vertical AI, so everybody might have integrated with. Nobody's making their own LLM, but everybody has, you know, sort of integrated with an LLM, and
Right.
I think these are, I think, the ones where you're seeing whatever consumer demand is there in India. I think uh, these companies are seeing the biggest sort of uptick from that, right?
100% no. I think just to add on to what you were saying, I think AI is going to be there. These platform players have a very large market share to also acquire in the country. I still believe they are at the nascent stage, right? So there's a lot that can be achieved in terms of growth itself,
Mm. Right.
right? So the next question, I'm again amalgamating many questions around this, where investors are a little concerned about, risk management in the portfolio. So if you can talk a little bit about that, how have we managed risk in the past? How do we intend to manage risk in the future?
Yes, perfect. See, I think risk management is something that we have a big focus on, right? We sort of we will go to. I mean, see, we employ various things for risk management, but that if we did not do risk management, that would not be the worst case scenario. Is
Right,
something that I think a lot about after this corrections, right? After this correction, so obviously, we do risk management by going to cash. We do risk management by hedging, right? We do
right,
risk management by going to safer sectors and sort of adapting to the market scenario, even with our allocation, right? So we
correct.
have these levels of risk management, but there are people, right? If you really believe in the company that you're investing in, right? And I'm not saying that we have done met the management for each of the company that we are investing in, and everything that we are holding is made of
Right,
gold. No, no, that is not the case. We will also sell these stocks, right?
correct.
More often than others. That we are not
Ab-
permanent owners, right? But yeah, what we will do, Siddharth, is that we do actually look at a lot of levers, right? What is the liquidity scenario in this company, right? What is
Right,
the, let's say, volatility in volume, volatility in prices? What is
right,
the, let's say, analyst, how are they rating this particular stock? How many negative ratings is this stock getting?
correct.
Is it what is the debt level in this stock? How is it leveraged? How is the
Right,
return on capital for this stock? So we do look at a number of things which give us a lot of assurance that this is not a disastrous company, right?
correct.
It's not, nothing wrong with these stocks, and that's the level of risk that we take. And see, even in this January, right? I think we got a little bit spooked by. See, we actually bought towards the end of January, right?
Right,
But then the market kept on correcting, and I was having those days where I have 10 calls scheduled in a day, so that where 10 people are
right,
telling me, how are you ruining my life in this correction?
correct.
But yeah, so see, I think so that's where you want to take these aggressive risk management calls. You want to hedge, you want to have
Right,
zero losses, right? And
100%.
see, that is all great, right? That's all great as long as it is protecting the risk, but that will also lead to opportunity cost loss, right? For example,
Correct.
the market sees a drastic recovery like last 3 4 days.
Right,
You would see some out underperformance, or even though it doesn't matter, in the long term, you will sort of pick up and make up
100%.
for that. But yeah, I
Right,
think so. We do have these risk management layers. It can be tricky, especially when many of our clients are tracking what is happening in the portfolio every day,
right,
right? Come and say, "Ki, why have you sold this? Why is this
right,
hedge this and this and that,
right,
right? Which is slightly tricky, but yeah, we use all these tools, which markets are nobody can predict what happens in the
correct,
market, right? But
correct.
in the long term, such risk management tools can really cushion some of the correct blows, right?
100%. Just to add what you said, and to say it out to investors that, as you would have seen in good markets, the performance of these strategies have been extremely better, right? Which necessarily means that we've not even beaten our peers, but the benchmark itself, right? So in difficult time, there might be some drawdown and agitation is expected in such cases, but also to reassure and assure that once the market starts picking up, our strategies tend to do even better, and all these drawdowns that we are seeing might be recovered, and there might be potential profits also that we'll be looking at in the near time future. So I think as a team, we are extremely optimistic about it.
No, definitely. And also, Siddharth, I think we were discussing it yesterday, right? There are many people, many investor managers who go and outright say,
Yeah,
I don't want that investor who comes and shouts at me in a market correction, right?
correct,
If you're going to create panic when the markets are falling, then you are
right,
not the best sort of an investor, right? You need maybe
right,
you might want to go to a slightly lower risk product, right? So
right,
yeah, so I think that's also something that we have to learn, and we have to find out, if you are about to do it for the next 10 years, then we are going to
Right.
see many more such corrections that we can't see. We have to handle all of them better than what we did right now. So
Correct.
I think.
I think one more thing to add upon is that as investors, we should always have a horizon, right? Where if
Mm.
I have a 2 year horizon for an investment that I'm taking, I necessarily don't need to track it on an immediate basis until I see my horizon being met up, right? Just to give an analogy, if we invest in real estate, we don't track the prices of the property every day. If we start doing it, real estate would not be a long term investment game at all, right? We track it only when we need to sell it, we ask for the price around, or when we need to know the net worth of the property itself. So the same thing kind of applies here. And I think patience is the key in such markets and such difficult times. And I'm sure all our investors have been extremely patient with us, and we expect the markets to do well, the strategies to do well, and to hear good from our investors also. Just moving on to the next question, two more questions, and then we'll wrap this up. um, Many investors are asking that we have this model portfolio approach that we follow, right? Now, when it comes to the model portfolio approach, also, the stock picking, how are we making it better? How are we making the model better? In the near future, if you could talk a little bit about that.
Right. So, see, how are we making the model better? So, we've been doing a lot of work during the past few months, right? So, our back test right now, Siddharth, are better than our back test that we started with.
Right.
And even the process, we've done a lot of things. I think, see, in terms of the models, see, what we think is we've started tried to reduce the noise in our models by reducing the amount of factors and combination of factors that we want to focus on, right? We've done a lot of research around, let's say, implication of these factors, right? One thing that I'll maybe share this on the screen, so that let me,
Sure.
this one article that I wrote, right, on being risk averse. Remember?
Right. Yes.
Yeah.
Yes,
So
that
I will
was
not.
very
Yeah.
factual. Yeah.
I will not share that article, but you see, there was this chart that I put out here, right? That in a volatile scenario like this, see, we obviously have some very good momentum strategies, right? But in a scenario where you see sort of a persistent volatility or a sideways movement, what you see is the quality strategy actually be much more robust. Quality and momentum be much more robust compared to momentum, right? Uh, you can see my screen, right? That.
Yes, I can.
Yeah, so see, I think that's what so in terms of models, obviously, we are trying to strengthen all of our strategies and also reduce noise. I think one concern is that the allocation should not shift more frequently. See, I would assume that we're not doing anything drastic in terms of shifting allocations, but see, a scenario like this is when if you look at any strategy, right, any sort of thesis, you would see the highest churn in a scenario where you have high volatility, right? For example, case in point, capital market, right? We all saw we had high allocation and then things really changed, right? So you had to shift your allocation, right? You had to go from get out of that segment at one point in time, right? So things will change more drastically in a scenario like this. What we are trying to sort of do is, improvise on our models, improvise on our entry exit criteria, improvise on how we look at risk, right? Uh, how do we, let's say, model or filter out stocks in risky markets versus how we fall to filter out in non-risky markets and stuff like that, right? So we've done a lot of good work on the models, and that gives us more comfort on how we'll approach the markets going forward also.
Perfect. Just to keep everything in the interest of time, one last question and then we can wrap this up. And I
Mhm.
would also urge all investors that in case we missed any questions, just drop it in to the questionnaire that we'll be sharing, and we'll try to pick it up as much as we can in the later webinars. Talking about future plans about Right Research itself, Sonam, a lot of investors are looking for an answer that if we are planning to do an SIF, AIF, what are the next plans?
See, SIF, I think we don't have clarity yet, right? Are the PMSs allowed to do SIF? We don't have clarity. Somebody was saying they might be But what I have heard before is only AIFs, only AMCs can do it. So we will get some clarity. If we are allowed, then we'll be very happy to do that. Second thing, Siddharth, is on AIF. Yeah, I think we're thinking a lot about it. We have couple of folks working hard on those models also, right? So we want to do long short, right? In volatile markets, that long short is amazing, right? If you can do long and short both, which is allowed in a EIF. So we are thinking about that. See, there are few things that you have to figure out, which is sponsor commitment or raising some capital for that and all that, which you're figuring out. And the volatility in the market is not the most conducive thing, but yeah. So that is a plan that we have, in the short term.
Absolutely. So yes, thank you for this session, Sonam. Thank you for the presentation as well. Some last words from my side, and then some last words from your side would be really appreciated as well. Just for a closing note. So what I would like to urge investors is that, firstly, thank you for being extremely patient with us in terms of our strategies. Thank you for showing faith in us from the initial days, right, where we were very new to the markets. You guys have sticked around, and we are extremely positive and sure that you guys will also stick around, so that not only in the difficult times, but we also talk to each other in the more patient and happy times, right, where we'll be talking about how we outperformed everybody in the near future, right? So your money is in safe hands. There is jitters and panics, but as a professional management, and as a professional fund manager also, your money is in safe hands, and there is some uptick that we'll be looking at. Risk management will get better. So yes, last words from you, Sonam.
Yeah, I think you said it really well, Siddharth. And I think Siddharth and people in our sales team are actually much more suitable for people to sort of talk to in such scenarios. Um, I think yeah, I think I already vented out a lot, so that's why I won't do that anymore. I think even as investor managers, we learned a lot of lessons, right? And obviously it's not over yet, right? You can see we talked about the scenario. There could be volatility that continues, but there's a lot of lessons that we have learned, that in terms of the best that we can do with our client communication, not overdoing it, sort of maintaining professionalism in a certain sense. That are many things that we have learned, I think, even as investors. I think people should sort of maybe count what they have learned in this correction, right? And how I think for many of the COVID investors, this is the first foray into a correction sort of territory, or such sort of a extended pain that they might have seen. So I think obviously a lot of lessons learned for even those folks. And yeah, I think we are very appreciative of the people who have shown this amazing trust in us. People who have only given us positive notes, right? Who've only given us reassurance in this scenario. We're very very grateful for them. And yeah, I think as a company we will also learn a lot from this. And we also continue to be very very confident about what we do. And yeah, I think we'll see the results come in.
Yes, perfect. Thank you for that, Sonam, and thank you everybody for taking our time on a Sunday morning to listen to us. Always happy to have answer questions. You can reach out directly. You can fill the questionnaire that we'll be sharing later. And thank you so much.
Thanks. Awesome.